Hi, good afternoon. You're watching Closing Trades right here in ET Now with me, Aisha Faridi, Nikunj Dalmia on the show. And for the markets, well, we did make that attempt to claw back to that 19,500 print, a failed one at that, because from there we fizzled out, and we fizzled out quite considerably. So we're now at 19,400 thereabouts, and it's a fall of a good 150 points nearabouts from the high point of the day. So what's putting pressure? It's clearly key heavies like an L&T and Reliance, which are dragging the index lower. So it's a 1% cut that you're seeing on Reliance. L&T as well has fallen 1%. HDFC Bank has literally been a no-go, but that also has dragged another 0.6%. There's Bharti, which I can see is in the red. And then, of course, there are some of the metal names like a Hindalco, Tata Steel as well, which are weighing heavy on the markets as we speak right now. What's happening, though, at the broader end of the market, that of course is a lot better than what you're seeing within the frontliners. But if you just map the Nifty advanced decline ratio, that's pretty much split and divided. Yes, the gainers are taking a leap in terms of what the declines are up to, but you're not really seeing a significant move there. So it's really pretty much in a no man's land. Let's see what the last 1 hour of trade actually throws up at us and where we take it from there, whether it's going to be for the greens or for the reds. So that's pretty much it when it comes to the market texture. In terms of individual stocks, it's the usual suspects. So JMR Infrastructure, of course, is galloping up. It's a 10% move, no less, on JMR Infra as we speak right now. There's Coforge, which is holding higher by about 9% after the PE exit. Emphasis, Coromandel, Siemens. Again, an interesting mix of trends there. And largely, it's the block names which are actually holding up. Nikunj.
Aisha, look, while there's a neat summary of where the market action is, I'd just like to bring out the very basic texture of the market. Again, when it appeared in the morning that you were motoring to the upper end of the range, you've been pushed back again. And ditto, I think, applies for the Bank Nifty as well. Ditto, I think, applies really for some of the stocks which were hopeful in terms of taking the markets higher. For me, I think there are two stocks which, I won't say they're a problem, but two stocks which are just not showing any follow-up buying despite news. One is Reliance. Block deal, Geo Financials, stake sale, and where is Reliance? Just gliding below 2,500. And HDFC Bank, I mean, I was reading flashes in terms of the growth, what they're talking about, in terms of the communication. I think I saw a flash in terms of a credit growth where they're thinking this official comment from HDFC Bank, and the market has no reaction whatsoever. And the third one, I won't use the word mystery because this, we told you so, is Geo Financials. And another circuit down. So that makes it now fourth circuit, and the number of sellers on the lower circuit, I think that runs into crores. So that just tells you, how this stock actually has moved ever since it's gone public. And you rightly said those block deals, whether it is Coforge or whether it is Manappuram or whether it is what's happening in Max Financial. So block deal stocks, I think, are the dominant one. So Kunal, I think, in the morning you have to toss the coin, right? It's actually like this. Just when it appeared that we will break down, the bounce comes. Just when it appears we will break out, the selling comes. We are going back to that range, right? You have to use the word range, to describe it. Is becoming like
it's
this.
It's not even that much of a range. It's range.
It's range. Yeah, it's a very narrow range.
Okay, range in a long time.
Yeah.
Time is the one you have to stretch yourself.
But yeah, I think that's where trading becomes all the more critical as well as difficult in these times, especially if you're an index trader. And I think adding to the point which you guys were highlighting, I think today you're seeing a lot of those flashy mid-cap stocks moving up higher by 8%, 10%, and that generally is a sign where I would believe that there's a lot of frothiness which is actually creeping in the markets, and I think that's something which I would believe could be a sign that the markets may be going through should be going through a lot of pressure going forward. The two levels which we've been indicating earlier, that 90,550 on closing basis could be a breakout point for the Nifty. We've not given a breakout except for an intraday up move about the 19,550 mark today. So if you happen to close below 19,400 levels, I would probably expect that this could be a decisive case of a breakdown on the index, on the Nifty specifically. And for the Bank Nifty, I would still go into a no trade stance, and my expectation is that till the time we don't break below 44,000 mark, Bank Nifty remains to be in neutral territory.
Okay. Nooresh, hi, afternoon. What trends are you picking up in this lull market?
So the view remains same. 19,400 is where you buy with a stop loss at 19,300. 19,600 almost got reached today. That is the point of time where you want to book some profits. The momentum comes about 19,600. We went to 19,550, 580 levels in the morning. So clearly the range has got established and it's a very clear 300 pointer range. So till the time we are in that range, we'll continue to see this flip-flop moves. Once we get out of this range, we get a 300, 400 pointer directional move. But the fact is over the last 3 sessions, we've hit 3 new all-time highs on the small cap index, the mid cap index. So the broader market stock specific action continues to be decent. So in this case, we wait for further price action beyond 19,600 to become more bullish or below 19,250, 300 to change the stance to a short-term bearish view. In the middle, all you have to do is be stock specific.
Siddharth, Khemka, good afternoon. What is good and what is bad about the afternoon today?
So if you look at, I think market, as you were discussing, is stuck in a range. When you think it is likely to go up, it starts falling down. And when you think it will go down, break down, and all the bears start attacking, it starts moving up, so strength. And if you look at global cues, they have been pretty mixed. On the domestic front, although things have been pretty stable, but there is an increasing concern on the inflation, which even the RBI highlighted in its policy meet, post-policy meet commentary. We're seeing how food inflation has inched up and is kind of creating some impact. Crude oil prices have inched up now because of the stimulus in China. Some of the metal and commodity stocks, commodity prices have also started going up. So the entire benefit in Q1 that we saw because of a large benefit out of the margin expansion due to the soft raw material prices, I think that is a concern that the market is having right now. And that is stopping the market from going, taking any strong upside from current levels.
Right. Just looking at some of the other trends as well in the market, of course, while tomorrow is going to be the all-important Jackson Hole event, which is currently underway, and tomorrow you'll have Jerome Powell's commentary as well coming in. But right now, the global construct is looking pretty okay. I mean, be it Asia, in fact, Asia has closed in with some stupendous gains. It's a 2% move that you had in Hong Kong. China as well was marginally in the green, 0.5% across the periphery markets as well. Europe too has had a very strong start. And in the pre-market trades, you've got a big move coming in the Nasdaq, digesting Nvidia's numbers, which were ahead of what the street was anticipating and which came in only post-market close yesterday. S&P futures, as well as I look at it right now, that's standing tall by about almost 0.6%. So there doesn't seem to be anything alarming, Nikunj, when it comes to the global construct. We are the ones who are just getting stalled right here.
So Aisha, really depending on, see today Nvidia is going to be having an impact on the way markets would move, because its expectations were large, but on large expectations, if you manage to beat that, just tells you that how strong this entire AI stroke, that entire chip business is. I mean, it's a large company, $1 trillion company, last of the $1 trillion company which has come out with numbers, and they've managed to get out of the park. So today I think would be a function of Nvidia. Then is Jackson Hole, and depending on what the Fed governor wants to talk about, I think he would be using the forum there, whether he wants to talk about short term, where the outlook for US economy is changed, where he wants to talk about medium term, where he'll have to talk about whether they'll stick to the 2% inflation guidance or not. So Jackson Hole historically is important. I don't think it will be just one of those events which will come and go. Just like Reliance AGM, whether we may believe it or we may not believe it, it is something which is of immense market importance. I think Jackson Hole, not that anybody expecting anything large, but in terms of a narrative, that narrative comes out. What if Fed says that, okay, we'll change our 2% inflation target? What if Fed says that, look, we were bearish about the growth, now growth seems to be making a comeback? That just will set the tone in terms of where the near term is headed, and that will have impact on flows. That's how I look at it.
Yeah, absolutely. Siddharth, are you finding pockets of exuberance in the market? We were just looking at the texture of names which are holding up today. I mean, a GMR Infra, for instance, Coromandel, etc. A lot of these two-digit stocks are the ones which are springing up in trade. We were talking about the power sector, and I mean, even names like Ratan India Power, which is, I think, in single-digit denomination, that also is seeing, some upper circuits in trade. What are you making of whether or not there is froth building up in individual pockets in the market?
Yeah, Aisha. So I think that what you're saying currently definitely makes sense because of lack of opportunities in the large cap, the mid cap and small caps have started participating. Definitely, some of them have that value in them because of the good earnings growth that they are projecting, or because of the overall economic growth that is helping. So, for example, if you look at power sector, there is a definite increase in the power demand, and power demand has definitely increased, and you see some of these utilities having an order book, some of the ancillary to power stock companies, they are getting order book, and on back of that there is an increased you can say euphoria with these kind of stocks. Most of these core economic sector companies are on the PSU side, and we have known that these PSEs have not participated in the market for the last several years, and hence there is some kind of value which is emerging. So maybe an NTPC, a Power Grid, or the REC, PFCs of the world, which are a play on the power sector where the demand has improved. Now, whether some of these companies definitely would provide that growth in the numbers, some of them would. In the case of an NTPC, where we definitely see increasing utilization levels, the increasing pricing, helping them improve the overall business trend. But some of the other names we don't have coverage, like the GMRs of the world or some other names, where there could be, say for example, Ratan India, where the exuberance is taking hold and people are comparing these companies' valuations with the one which do have some value or quality. So definitely, I think there is some fraud building up in the broader market, but it doesn't look like a broad-based fraud in the market. As I said, some of these stocks, they do have value. They are not participated. They were deeply undervalued, and now market is finding some value in them. So I think some of these, especially in the public sector stocks, they could continue to do well on back of strong order book, strong demand, and growth in the business.
Nooresh, I'm just going to shift and talk about GMR Airports. It's a liquid stock, Nooresh. It's a large stock. It's a stock which typically HNI investors and traders, they feed on. It's up 10% today. It was up, I think, 10% yesterday. That makes it 65 and 20% in 2 days. Is the stock headed towards 75, 80 or even beyond that?
So in such a momentum, it's tough to take a call where it will pause. Before this momentum, the stock used to be at 40 levels for almost 1.5 years. It would go to 45, again back to 35, finally broke out after 1.5 years of consolidation. And now it has gone up to almost 75, 65 plus levels. So the problem is, in such a case, all you can do is keep a trailing stop loss and write down to the position. Cannot buy new at these levels when it has moved up 30% very quickly. So out here, momentum is too much. Tough to take a call where it will pause. The trend is still positive. Volumes have been decent enough in this move. And if we go back to earlier highs back in 2008 to 10, it used to be 80, 100. So it would be tough to cross 80 odd levels easily.
Okay, on that note, let's slip into a very quick break. GMR Airports, of course, is one high flyer today, as is Coforge, Emphasis. But we'll discuss the market trends when we come back.
And we're gliding down. 19,400 is going to be tested. And we are looking at the bank Nifty holding in the green, but the Sensex and the Nifty have already touched and dipped below 19,400. So it's not turning out to be a session which we thought in the morning would be more green than red, and now suddenly markets have taken a complete U-turn. Nothing large in terms of a trend actually. I like to draw, however, everyone's attention to what's happening in the so-called new discovered space engineering space. I mean, that entire space engineering club has seen huge re-rating because of Chandrayaan. Siddharth, Khemka, how realistic are the gains in some of the companies which have got business or presence in this entire space stroke rocket vertical? Stocks have gone up 50 to 100%, even though the upside could be minuscule. Is it a time to lock out of a BHEL or a Paras Defense or a Centrum Electronics? I mean, just about every company in that space has got re-rated because of the Chandrayaan mission.
So, Nikunj, if you look at the defense space has been in momentum not only because of the Chandrayaan effect, but in the past several months we have seen the large order book that has flown to some of these Indian companies. The opportunity for the private sector in the defense has quite opened up in the last few years. And a special mention here is to the exports potential that has opened up. If you look at what the government has done is not only tied up with some of the foreign companies to make in India, but also do the technology transfer. And that is where the long-term, you can say the multi-year growth story for the defense comes into play. Chandrayaan, I think, is just one of the events which showcases the capabilities, or you can say technical capabilities of some of these companies. Definitely, there is not going to be so many space projects in India. There could be some opportunity from some of the global players where they can come and they can supply to them. But I think space is just a small portion of the overall opportunity. Defense, especially in an environment where we have seen some of the wars, some of the geopolitical issues, and India being in a sweet spot, being a neutral organization and a friendly nation to a lot of these countries. So I think, yes, the stocks have run up. There could be some consolidation if you look at the valuations, but I definitely believe that there is definitely a long-term growth story for the Indian defense companies.
Right. Okay, that's the take coming in on some of the defense names. Of course, tomorrow is going to be an all-important day. You'll have the RBI MPC meeting minutes. That's going to be actually today. But tomorrow, Jerome Powell is going to be speaking at the Jackson Hole event. You'll have the ECB President Christine Lagarde's speech as well tomorrow. So that's going to be important. Back home, of course, when it comes to AGMs, you'll have Oro Pharma and InfoEdge AGM slotted. And of course, the other big event is going to be ticket sales, Nikunj, for 2023 World Cup is going to begin.
Yep, I really hope
it's not. You logging on to book my show.
I'm hoping that you will be able to get me some passes.
Yeah, right. Good one.
The silence after that. I'm accepting passes.
So am I.
No, it would be interesting, Aisha. I mean, next couple of months are going to be like cricket mania. And, just that we know that what cricket and what it means for India.
World Cup.
And it is World Cup. And if India goes to finals, imagine that it would really be the decade, the event of this, decade, so to speak. I heard a guest saying that, look, I bought into Zomato, and that was Rahul Chadha. I said, World Cup is coming. And history tells us that when World Cup is there, you'll be ordering more food, you'll be dining out. And if India reaches final, trust me, a good stock to buy really would be Zomato. The amount of dining ins and the amount of dining outs you would be doing, and the restaurants and the whole beverage sale and beer sale, hotels. I think this would be, so this really would be an exciting time, so to speak, because it really could be the event of the decade, so to speak, if India reach finals and wins the World Cup.
Absolutely. Siddharth, what are you betting on? And I'm not asking which cricket team, but hotels, hospitality, consumption aggregators, food aggregators like a Zomato, etc. They'll all be in demand.
Yeah. Aisha, I think this is entire space. We have seen not only the hotel space, which has seen a lot of improvement in the occupancy, but also in the average room rates, which has helped them almost 8-9 years that the cycle has improved for the hospitality space. But if you look at the food aggregators, we definitely like Zomato. We have a target price of 110. We believe post the excellent Q1 numbers where the company has turned profitable at PAT level, which is much ahead of its Q4 FY24 guidance. We believe that the company could see strong growth where the management is confident of achieving 40% plus organic growth. Even the Blinkit is kind of now seeing improvement. The company is expecting break even in Blinkit's EBITDA over the next 4 quarters, which is again much ahead of what the street was expecting. So definitely it's a space where it has seen a lot of disruption now going away. We have now seen where they are increasing the prices for delivery, and that directly flows into the profitability. So we believe that the long-term growth opportunity for Zomato is very strong, and we are expecting it to turn reported EBITDA basis positive by the 4th quarter of this year, which should result in a strong profitability going forward. For FY24, we have a PAT of 1.3 billion, and for next year, FY25, it should increase to 8 billion rupees. So hence, I think the momentum for Zomato should continue.
Okay. All right, now Rahul Chadha of Merani Asset Management on where he finds value in this market, why he's underweight on banks but continues to bet on hospital stocks.
I think things are on control. We've had strong execution on the infrastructure projects. The GST collections have been fairly robust. So somewhere that kind of provides a flow to the growth, that provides a flow to the market in this period of uncertainty. From corporate India, I think the feedback's been mixed. Banks is as good as ever. There are pockets which are doing exceedingly well, hotels, travel, etc. But consumption, particularly from retail perspective, is weak, and nobody is able to point a finger at what is the reason. Is it that the consumer is in shell because of inflation, etc.? But yeah, consumption's been a bit weaker.
But if that is the case, then why the banks are showing growth in the retail book?
So I think this is a question we all are asking. Is it unsecured loans? And to be fair, if you ask me, what worries me is this growth in unsecured loans over the last 5-7 years. And now everybody is kind of complacent about it. So one thing which would worry me about banks, and this is a space we've liked, is, look, are we going to see some of the delinquencies come through in unsecured loans? There seems to be a kind of an complacent attitude about it. We've seen RBI also come and talk about it. Hopefully regulators tighten more norms on this.
It's been quite a deviation from the pharma space with what we saw during COVID time, pre-COVID, etc. What's the outlook currently on pharma, particularly with the expensive valuations?
So if you see pharma space, the rally happened from late May, June, when there was this buzz that, look, pricing in US has improved. One thing which we guys have to watch out for over the next 6-9 months is the strong deflationary impulse coming from China. See, demand's kind of been very weak post this reopening. We've seen renminbi come under pressure as China writes a blank check for the property developers, local governments, etc. And our belief is that renminbi further weakens from here. As renminbi weakens from here, the Chinese corporates see less demand at home. A lot of that material is going to come in the export markets. So pharma story looks good for next couple of quarters, but beyond that I would be watchful, more so in terms of deflation which is coming from China.
You did speak about, consumption as being a bit of a weak link, and, some of the inflationary concerns as well persisting. So what does one do then when it comes to the consumption space as a whole? What's the advice?
I think the idea here is to buy on dips. Right now one would be more predisposed towards consumer staples. They've got pricing power. And with this deflationary impulse which is coming, their RM costs will go down. We've already seen that in the last quarter. They've had 3 to 4 percentage points gross margin increase. The hope is ahead of the election, government gives some sops and you will see some demand momentum pick up. Discretionary, I think, is going to be long drawn recovery. May take more than what it takes for staples, but staples over discretionary here.
Now, Adani stocks are falling again. And they've started falling. Kunal, you don't track Adani stocks, right? No. Okay. Nooresh, Adani stocks, it's just a pattern, but second day on the trot now they've fallen in the second half.
So it's been a case with them, always volatile. The only places, like I've been saying, Adani Ports is still okay because that's a stock which came back above the January highs. Closer to 800, that becomes an interesting buy. But Adani Enterprises will continue to see volatility. So apart from Adani Ports and maybe Ambuja Cements on dips to 430, 440.
Right. Okay. That's the word coming in, and some of the Adani Group stocks hugely volatile off late. I mean, the last 2 trading sessions, they had a drop. Yesterday, they were on their way to recovery, and again falling today as well. Some of these mid-cap IT names actually continue to hold out. Even yesterday, you did have spots of green within the entire IT pack, or actually throughout this week. Today, of course, Coforge after the PE exit is actually holding up. There's Emphasis as well, which is looking smart. Amongst the large caps, I can see Infosys, which is actually holding out. LTIM is not looking all that bad. Wipro as well, just about marginally higher as we speak. Nooresh, any trends within mid-cap IT specifically?
So mid-cap IT has been relatively a better performer. Coforge today, after the block deal, has become interesting. The stock has again got into momentum. Persistent has been a relatively better performer, which looks the most interesting one. If you look at the chart, it was at 5,200 back in 2021, then in start of 2022, then closer to 5,000 again in March 23, as well as in June, July. And even now we are getting closer to that mark. So if it can sustain 5,200, that would be a breakout of the last 2 years, and that could create a move on the upside towards 6,000 also. So the most promising name which has been knocking at the same resistance for the last 2 years, wherein rest of the market, the rest of the IT names have been knocking at the lower end of the range. Persistent is the one which props up on our radar.
Right. Okay. Siddharth, great to have you on the show. We'll let you go on that note. Thanks as always for taking the time out. On that note, let's get some closing trades as well going. Kunal, what's on your list?
Well, that'll be a buy on IRCTC. That stock is coming back into the thick of a breakout about 660 mark, coming back into a flag pattern breakout. So would be interesting to buy IRCTC.
Okay, a buy on IRCTC. That's the closing idea from Kunal. Nooresh, what about you?
So that would be IndusInd Bank. Very interesting formation here. We are back to the same range of 1425 to 1435, which has been the top for the last 1 month. And the stock is still at the same price as where it was pre-COVID. So could be a re-rating candidate going forward. If it sustains 1435, could be a move towards 1600.